Hello everyone, welcome back to Just Invest Today. And in today's video, we're talking about Chicken Genius Singapore because he's been coming out and releasing a lot of videos since his last video of quitting the market because it was getting too hard and people were throwing too much criticism at him and stuff like that. So he canceled his channel, but now he's back in full force telling you stop buying the dip. This is what he's coming back to. He's really advising people to stop buying the dip. This is the guy that was famous for buying the dip, and now he's telling you stop buying the dip. I wonder why. The same guy telling you can retire on Tesla. So I think he's saying stop buying the dip because he understands that Tesla, one of his main stocks, still has a high PE. And you have to realize a lot of these stocks with high PEs have been getting killed in the market. So he probably thinks that Tesla has a long way to go. So he's telling you stop buying the dip. It's not a good time. Because he wants you to retire on Tesla, but if Tesla keeps going down because it's at a high PE and the market is not valuing these high PE companies as much, then you are at huge risk. And he's telling you that cash will be the best performing asset. Guys, cash is losing around like 8%, probably way higher than the Fed's actually telling us. That's the best performing asset, something losing money? Chicken Genius Singapore is basically telling you there's zero deals right now. That's what he's telling you. That's what he's basically telling you. In this market right now, that's lost 20+%. There's zero companies to buy. This is the guy giving you advice, telling you there's zero companies to buy, and cash is better than any asset right now in the market. Can you believe that? That's like Warren Buffett in 2008, 2009 not buying anything because he was scared of the worst financial crisis or one of the worst financial crises. Oh my God. He ran out of money. He was selling off positions to buy more. He bought BNSF. He bought Goldman Sachs. He was buying Bank of America. He's buying Dow Chemical. He was buying all of that and even more during that time. It wasn't worried about what the Fed was doing or the financial crisis. He was buying. So in this market right now, you're supposed to basically dollar cost average. If something goes down 10%, put a small position in. If it goes down another 5 or 7%, another position. If it goes another 10%, another big position. How much can the market go? You think it's going to go 50%? You think it's going to go 60, 70? If it goes to like 50, 60, put your money in, man. What are you waiting for? There's not going to be a lot of times like this where you can just put your money into these crashes. It's not the time to wait and be scared because, oh my God, what's the Fed gonna do? He is trying to predict what the Fed is gonna do. And that's the biggest issue. We all know the interest rates are gonna go up. We all know the Fed is kind of doing QT. But still, with all of that, you still can't predict where the market's gonna go just because that's happening. The market still can go up 10, 20% at the end of the year. You don't know, man. You really think you know what the market's gonna do? But it always switches what it's gonna do because you just never know what the market's gonna do. He mentioned the Fed. He mentioned the economic times, people losing jobs and all of that stuff. And with all of that, stop buying the dip is the worst advice because cash is not it right now. You still have to buy good assets. Buying good assets, it's way better than holding cash. If you know your company 5, 10 years down the road, it's going to be strong, it's going to be earning more money, it's at a good price, why wait until the Fed tells you to? Because this was his advice. He said wait until the Fed is pretty much putting back money into the economy because soon as they take money out of the economy, everything's going to keep going down, keep crashing. And he said since 2008, the Fed has just been injecting money into the economy. So that's why all these stocks have been taking this huge run. And since now they're doing QT and taking out money out the system, everything's going to go crashing down and you don't know what to do or you shouldn't buy the dip. That's what his advice is. But the Fed doesn't even know what the Fed is doing. What if they just stop buying or they stop raising interest rates? Who knows what's going to happen? What if inflation actually takes a turn and doesn't go up in the next 3-4 months? Who knows? That's a possibility, even though it's not likely, but just who knows what the Fed's going to do? Imagine making these macro bets. He doesn't know what's going to happen. No one knows what's going to happen. Best advice is always to put your money when these dips happen, these 5% dips, 10% dips. always have cash to keep investing down below, but don't wait until this visionary Fed tells you, oh my god, we're gonna stop QT. He's telling you to wait until the Fed just magically tells you that we're putting money back into the economy or stops its tightening. Like, come on, like, really? That's the time when you're gonna start buying? What if the market's already up 10-15% when the market tells you to do that, or when the Fed tells that to people? You just don't know with the macro situation, even though the macro situation right now is giving you many opportunities. So what he's telling you is pretty much wrong and just not smart. So guys, tell me what you think about this video. Smash that like button, subscribe to my channel. Peace.